David, thanks a lot for joining us. Much of the talk out of the United States continues to be dominated by U.S. President Donald Trump and his administration talking tariffs, talking tough and combatively on tariffs. You continue to believe that this is a negotiating strategy. Tell us where you think this is ultimately going.
Yeah, I think what he's doing is these are negotiating tools. He's using them as a cudgel with which to impact his foreign policy and trade policy. He wants to rebalance the world economy somewhat. There's a lot of countries that are running very large trade surpluses and countries that are running trade deficits, and he views that as being taken advantage of. Now, he doesn't have all of the power to just do what he wants. Congress has some handbrakes that can stop that. And so he's using the tools that he does have power to use as bargaining chips. He's doing it very quickly, flooding the zone, moving quickly. And I think what he's trying to do is use Mexico and Canada as a way of acting strongly for a larger fight with China and possibly Europe along the way.
Inflation is stubborn in the United States, and one of the consequences of that is that investors who would love to see rates come down are going to have to wait longer, quite likely right until the end of 2025 for a Fed rate cut. What is your view on tariffs and inflation? I would say most economists believe that tariffs will put upward pressure on U.S. inflation, but there is debate on that point. Where do you come down?
I'm going to wait and see to see where that plays out. I mean, I think the largest piece of inflation is getting driven by the housing market currently, which seems like it is rebalancing itself fairly quickly. You know, you're seeing rents come down, you're seeing house prices start to level off and inventory going up. I see more of that coming. I know markets are pricing that you're not going to see many cuts this year at all. I think it's a little early to say that, to be frank. And you know, the inflation data that came out earlier this week looked high. That's CPI. There's quite a large wedge appearing between PCE, which is the Fed's preferred metric, and CPI. And the PCE read-through was actually not as strongly inflationary. So I think there's plenty of time for it to sort itself out and for inflation to continue floating down. The Fed thought you'd get to 2.5 by the end of the year. I think that's still perfectly reasonable to do so.
So with those views in the background, how do you believe investors should be positioned right now?
I think that a fixed income portfolio looks good, particularly at the front end. I think it's fairly difficult from these yields to lose a lot of money in bonds unless inflation really takes off, which I don't see happening. But you know, the yields that you're getting in fixed income, plus the potential for them to do well in well in a slowdown is really there. I think there's areas of the commodity markets, both on the long and the short side, that look really interesting from here. You know, we trade systematic managed futures strategies, so we're both long and short. And I think there's real interest in both sides of that in the commodity markets. You know, gold is going straight up, copper is going straight up. Some of those commodities look really strong. And yet there's other areas where being short makes sense, particularly from here in some of the markets that we follow.
Lots and lots of attention on gold in this early 2025. Where do you believe gold is going?
I think the drivers that have led to the rally are still in place. Really, I think what's going on is that there's countries that have savings in dollars or had savings in dollars. And they want to diversify that, and that if the US goes around and puts sanctions and seizes assets as it did with Russia, if you're an emerging market country, you might be worried about the safety of your dollars and interacting with countries that can be reached by the US sanctions and US banking system. And having money in physical gold that you then move to your own country is a different way of storing wealth. Seems like a fairly good idea if you're on that side in a country that might not be that friendly to the US. So I think that's one of the drivers. It doesn't seem like that's going away. So I think that's what's driving gold, and I think that's likely here to stay.
Gold is the key precious metal. Copper is the key base metal, and those prices, notwithstanding some sporadic rallies, have tended to drift sideways for a while now. When do you see some direction in the copper market?
I think